Hey friends, in this video, I'm going to take you through how to purchase a property step by step, so you know every single step that you'll need to make in order to purchase your first property. So let's dive right in. The very first step is to save a deposit. But how much money will you need to save up in order to purchase your first home? Well, this all depends on the property that you're looking to buy, where it's located, what type of property it is. Is it a house? Is it an apartment? Is it a townhouse? Has it been newly renovated? All of these things and more can influence how expensive a property is. Oh, I wish I could afford this house. Maybe one day. So in order to get a good guide of how much properties are selling for, a good place to start is to start having a look at websites such as realestate.com.au and Domain if you are located in Australia. And if you're in the US, you can have a look at a website called Zillow. As a general rule of thumb, similar properties have similar purchase prices. So let's just say, for example, you're looking to purchase a 2-bedroom apartment in this particular area. You can pretty much assume that a very similar property in a similar condition would have a similar purchase price as well. And the more recent the sale is, the more accurate the price will be. So once you've done some research into what type of property you're looking to purchase and which areas you'd like to purchase in, the next step is to work out how much of a deposit you would like to save up. As a general rule of thumb, 20% is a recommended deposit. So if the purchase price of your property is $500,000, then you would need a $100,000 deposit in order to purchase that property. However, nowadays you can purchase a property with less than a 20% deposit. And this has a few benefits. You can get onto the property ladder even earlier because you will need less of a deposit to purchase your first home. However, something to keep in mind is sometimes when you do have less than a 20% deposit, you will need to pay something called lender's mortgage insurance. And this gets added onto your home loan by the bank. There is the first home buyer's deposit scheme, which does allow you to have a 5% deposit and you don't have to pay lender's mortgage insurance. However, this does have some special terms and conditions and it only applies to new builds. But these are all some things that you should consider when you are looking to save a deposit for your first property. Another thing to consider is the first home buyer's grant in Australia. You may be able to receive up to $20,000 in some states in order to purchase your first property. However, terms and conditions do also apply for this grant and they are different in different states, so it is important to do your research into this as well. Something else that you should consider when you are saving up to purchase your first home are some other fees that may be associated with purchasing your property. Fees like smashing the like button on Queenie's videos and subscribing to our YouTube channel, because that is all she asks. If you're buying your first home to live in, you may be able to get a stamp duty exemption. However, if you're not planning to live in your property and you're planning to purchase this as an investment, then you will need to factor in stamp duty. And stamp duty prices do vary state to state, so it is important to do your research on this and see if this will apply to you. There also will be some other fees associated with purchasing your first property, including conveyancing costs and solicitor costs. So you should also factor this in when you are saving up to purchase your first property. Now you have a goal in mind in how much of a deposit you would like to save up. The next step is to figure out where you are going to park your money while you save for your first home. I know exactly where I'm going to put my money. Under my mattress, of course. A great option that you can have a look into is the First Home Buyer Super Saver Scheme. This allows you to salary sacrifice into your superannuation and then withdraw these extra funds when you're looking to purchase your first home. And this has a few different benefits. The first benefit is that superannuation is only taxed at 15%. However, some of our marginal tax rates are from 30% up to 45%. The second benefit is that when you are salary sacrificing, you're essentially asking your employer to sacrifice more of your pay straight into your superannuation. So you will never get access to these funds and therefore you won't get tempted to spend it. I know I said I wanted to buy a house, but that car over there looks really nice. You can currently withdraw a total of $30,000 from your extra salary sacrifice contributions. But the key word here is extra salary sacrifice contributions. You can't release any of your normal super contributions. From July 1st, 2022, this amount will increase from $30,000 to $50,000. Terms and conditions do apply for this, so it is important to do your own research. And if you're a sole trader or a business, you can still use this scheme. However, However, it is really important to chat to an accountant to see how this can work for you so you can still get those tax saving benefits. Another option that you can use to save for your first home is a high interest savings account. Once you have your deposit saved, the next step is to start looking for a home loan. And the reason why this is important is when you are putting down offers on places that you're looking to buy, when you do have a pre-approved home loan, this will give you more chances of being able to purchase that property that you like because you've already done all the work and your home loan is pre-approved. So the first step in finding a home loan is to work out how much money you can actually borrow. Start by chatting to different home loan providers and banks once you already have your deposit. And how much money you can borrow to purchase your first home depends on a few different things. The first thing that banks like to look at is your expenses from the past 3 months. So when you are shopping around for different home loans, it's important to try and keep your expenses as low as possible, especially from the past 3 months, because the banks will go through your expenses from the past 3 months to see what your spending is like. So I see that in the past 3 months that you spent over $1,000 on food delivery. Is that right? Something else that the banks will look at is your income from the past 3 months. So if you're an employee, the banks will have a look at your pay slips from the past 3 months. And if you're a sole trader or a business, the banks generally like to have a look at tax returns from the past 2 years. So for my income, can I just send you my YouTube video with my latest YouTube income? By the way, if you haven't watched this video, you can check it out up here. Then the banks will also like to have a look at how much money you currently have saved up and any other assets that you have. And finally, the banks will have a look at your credit score or credit report to see what your credit history has been over the past couple of years. So that is why it is really important that we are on top of our personal finances and we are paying off any consumer debt that we have, for example, personal loans or credit card debt. And if you would like to check your credit score for yourself, I do have a link in my description below to WeMoney, which is a free app that you can use to check your credit score. And if you sign up with my link, we both get a free $5. So while you're having a look at different home loans, another thing that you can do is shop around and also try to negotiate the best deal for your home loan. See if there are some home loan providers or banks that can price match some really good deals and try to get the best possible interest rate and best benefits for your home loan. So the next step is the fun part, and that is researching properties to purchase. Something that has really helped my partner and I when we were looking to purchase our first home was put together a spreadsheet of all of the things that are important to us so we can start to keep track of properties that we're looking at. So this is what our spreadsheet looks like. So we've got the address, the suburb, the link to the property, the inspection date, whether we visited the property or not, the asking price of the property, the sold price of the property, if the property has been sold, the type of property, the agent's phone number, how many bedrooms, bathrooms, what the strata is, if it is an apartment, the internal size, the price per meter square, the number of units in the apartment block, if it is an apartment, and a couple of other things about the potential home loan we would need to get in order to purchase this property. If you would like to get this spreadsheet completely for free, I do have a link in my description below. Keeping a spreadsheet like this can really help you with your property research. It can also help you keep track of how much properties are selling for and whether we're in a buyer's market or a seller's market. So if you're having a look around at different properties and you do notice that a lot of these properties are selling for more than the asking price, then you know that you're probably in a seller's market. And this can give you a guide of how much money you should be offering when you do make an offer on a property. And vice versa, if you do notice that properties are selling for below the asking price, then you do know that there is a bit of room to negotiate the price. As you start to research different properties, a website that you can check out is called Microburbs. This can give you data about the property and the area that you're looking to purchase in. And another website that you can check out is called WalkScore. And WalkScore gives you a score based on how convenient this property is to be able to do local errands. For example, buying things from the supermarket and taking public transport. Something else that you should look at when you are researching different properties is the rental income if it is an investment property and similar sales in the area that you're looking to purchase in. It is important to have a look at similar sales that are very, very similar and very close to the property that you're looking to purchase. So ideally, these similar purchases should be within a 2-kilometer radius. The sale should be as recent as possible and preferably in the last past 6 months. It should be the same type of property, for example, a house, a unit, a townhouse. They should also have a similar amount of bedrooms, bathrooms, and parking spots. They should also have a similar land size. It should also have a similar property condition. These similar properties and examples are things that you can bring up when you are negotiating the price of your property. And they can also give you a guide of how much money you should be offering for this property. So now that you have narrowed down a list of properties that you're really interested in, the next step is to start inspecting these properties. So ideally, it is a good idea to have a look at properties a couple of times just to make sure that you have made up your mind. So you can do the first inspection yourself, just have a look at the property, examine the condition of the property, and make some notes with your findings. And if there are any potential improvements that you will need to make. Once you have thoroughly inspected the place yourself and you're pretty happy with the property and you are looking to potentially make an offer, the next step is to start to get a builder involved. Builders tend to have a lot more experience in properties and they will be able to tell you if that crack in the wall is going to be an issue later on down the line, or if it's just a bit of a cosmetic issue and it won't really be a big issue later on. Do you think that this crack is going to be an issue? Getting a builder to inspect a property may cost you a little bit of money, but it's definitely worth it down the track because we do not want to be purchasing properties which will have really big expensive issues later on down the line. Local Sydney woman loses her house after listening to a dodgy builder. So once you have examined the property and the builder has examined the property, the next step is to start to get a solicitor involved. And the solicitor can help give you a council plan. The solicitor can examine the local area and the property that you're looking to purchase, and they will be able to tell you if there are any constructions that may be happening in the near future that could affect the property value. For example, if there's a brand new highway being built on your street, or if there will be a massive apartment block being built next door. These things can really affect the value of your property, so it is important to know about these things in advance. If you're purchasing a house, a solicitor will be able to tell you if there are any things about that house that you should know about. For example, if there are any pipes or sewage or drains underneath the property in the backyard, this could potentially affect the land value of that house because you might not be able to build on top of the backyard. If you're purchasing an apartment or a townhouse, the next step is to have a look at the strata, and this can give you some insight into whether or not everything is in order within this apartment block. For example, has the owner paid their strata fees, or are there any debts outstanding? Just in case anything unexpected were to happen to this apartment, do they have enough funds to cover those unexpected costs without having to raise capital from the rest of the apartment owners? Hey, this is the strata manager. So I know that you only just purchased your apartment a couple of months ago, but we're going to need $12,000 to fix balconies because we don't have enough money in our sinking fund. So please transfer the money as soon as you can. Thank you. And finally, especially if you are purchasing a new apartment, it is really important to start doing some background checks of the construction company that did build your apartment block, and especially if it is a new apartment or if it is an off-the-plan apartment, because sometimes with newer builds, it can be really difficult to see cracks in the walls because they are brand new, and often the cracks only start to form after 10 years or more. So it is important to do your due diligence on the construction company just to make sure that they do have a good reputation. You can have a look at reviews online and see what people are saying about this construction company and see if anybody's had any issues with them in the past. So while doing all of these inspections does take a lot of time, it is definitely worth it because purchasing a property is one of the most expensive purchases that we will ever make. So we do want to make sure that we are purchasing the right property and we're not going to get ourselves into any trouble later on down the line. And doing all of these checks can also give you a bit of negotiating power when you eventually do start to make an offer on this property. For example, in your building inspection, if you do notice that there are any issues with the property, for example, let's just say the water tank is a little bit old and probably needs to be upgraded, that is something that you can factor into the negotiations. You can say, well, I would like to offer XYZ price because because the water tank is a bit old, or perhaps there might be water damage in one of the rooms. These things can help you make more informed decisions, and they can also help you negotiate the price of the property. So generally, you can make an offer on a place in one of two ways. The first way is by doing a private sale, where you go directly to the real estate agent and make an offer directly to them, or make an offer directly to the vendor, which is a fancy way of saying owner. This is typically done in a buyer's market, when buyers do have a little bit of leverage and negotiating power over sellers. However, generally when we're in a seller's market, a lot more auctions will be happening, which means that they do bring together a bunch of buyers, and those buyers make offers on a property, and the highest bidder wins and gets the opportunity to purchase that property. Generally, you will be able to get a lot better deals when we are in a buyer's market rather than being in a seller's market. When everybody has signed all of their documents, there generally is a bit of a cooling off period. This cooling off period does vary state to state, but generally it's about 5 business days. And after this cooling off period, there is something called a settlement date. And this is when ownership of the property passes from the seller to you, the buyer. And this is when you will need to pay for the property. The seller typically sets the settlement date, and as a general rule, the settlement period is usually from 30 days to 90 days. Something that you should consider when you are making offers on places is you do want to make sure that the property that you're purchasing is actually worth the amount that you're purchasing it for, because the final step is the bank will actually bring a valuer to the property that you have purchased if the vendor does accept your offer. And this valuer will inspect the property just to make sure that the property is actually worth the price that you're looking to purchase it for. And once the bank is happy to sign off on that purchase and everybody's happy, well then congratulations, because you have just purchased your first home. So that is a step-by-step guide on how to purchase your first property. If you did like this video, make sure you tap the like button and subscribe to this YouTube channel for more content about investing and personal finance. And thank you so much for watching this video all the way to the end. I really appreciate you guys. So write me a comment below with the word key in it, as in house keys, just so I know who watched this video all the way to the end. I really appreciate you. And I will see you in the next video. Bye. And if you want more content, don't worry, I got you. Here are some more videos that you can watch, so make sure you click the links and click through to another video.